Good morning and good afternoon, depending upon where you're at. Welcome to the October 11th WASDE review webinar. My name is Greg Horstmeyer. I'm editor-in-chief at DTN, and I'll be the moderator for today's event. Today with me leading the webinar is our DTN lead analyst, Todd Hultman. Listening in the wings, we have a great surprise for everybody today. Listening in the wings today is Rhett Montgomery, who will be taking over as DTN's lead analyst, as Todd's going to be retiring. Todd's going to run the webinar today, so we won't play the Buckingham Palace changing of the guard music quite yet, but we're excited to have Rhett on board, and also it's great to have both those gentlemen in here today working on the slides and working on the comments that you're going to be hearing today. So you're getting two for the price of one today. As always, our audience participants are in a listen-only mode, but you can ask questions anytime during the event. To do that, click on the Q&A option, which is on the lower right-hand side of your screen. That'll open up a message panel, and you can type in questions to Todd and I. We'll hold all the questions till the end of the webinar, but please type them in as you think of them, because that will help us schedule where to ask which questions and how to handle that. This event is being recorded, and a broadcast link will be on the dtn.com website within 2 business days. That's the same website that you went to sign up for this event. So with that, we're ready to begin the webinar. I'll turn things over to Todd. Todd, a little bit of difference in core numbers, but not too many surprises with the WASDE report this month.
Yeah, absolutely right, Greg. And hello, everybody. Thanks for joining us again. I have a feeling this will be replayed a lot on replay links at later times, judging from the amount of combines I'm seeing in the field these days. So I understand it's a busy time, and hope everybody's having a safe harvest period. Well, this October WASDE report, obviously the focus is still on the crop estimates for U.S. corn and soybeans. That's where the biggest attention will be today, and where most of our questions are at this time of year. I do want to show when it comes to the history of USDA WASDE estimates, now that we're moving from last month's report into October, we're actually getting into a time frame where USDA has a much more reliable estimating track record when it comes to looking at the crop progress. And of course, that all makes sense. I mean, we're in the fields now, we're getting a lot more yield data. There's plenty of anecdotes, and the producer surveys are going to be more effective. We're all starting to learn more, and there's plenty of gossip going around about who has a good crop and who doesn't. But just to show you, this October report, the 90% confidence interval, and this comes from USDA's keeping their own track record of how things go. It's plus or minus 3% on corn, plus or minus 4% on soybeans. So, when you look back to the early period in the summer, May, June, and July, it's almost not useful to look at the production estimates at that time. But now we're getting into a much more reliable time. As reliable as a forecasting process can be. And I think just our own anecdotes, and the market itself right now, you can tell, has a pretty strong handle on what the production estimates are for the year. So with that in mind, let's go ahead and take a look at what USDA said for the corn estimates today. This is the U.S. balance sheet. It just came out at 11 o'clock. And I'll just take your attention first to the lower right-hand corner, and you see that the new ending stocks estimate is just under 2 billion bushels, and that's down from 2.057 billion bushels a month ago. The crop estimate, which everyone was wondering about, by the way, the trade was looking for a slightly lower estimate on the corn crop today, but actually USDA came in with a slightly higher corn crop estimate. They increased it by 17 million bushels. It's now 15.203 billion bushels. The acres planted and harvested estimates remain the same. The yield estimate increased slightly from 183.6. Now they're saying 183.8 bushels an acre. As you know, that's a record high. That's being estimated here so far. While we're at it, we have one more change on the new crop season to mention, and that is the export estimate was increased by 25 million bushels. So now it's 2.325 billion bushels. The good news is that in the old crop season that just completed, the U.S. is the king of world exporters in corn once again after losing that title for a temporary period. And so far, they're saying that we'll be the king again of U.S. exports in the new crop season. And we'll talk more about how the export sales are going early in the season here just in a bit. Before I turn away from this page, I want to mention that we do have some old crop season adjustments also, and that's in the left-hand column that you see there, where the new ending stocks estimate is 1.76 billion bushels. That's actually 52 million bushels lower than what was estimated a month ago. And of course, this is largely coming from the September 30 stocks report, where we saw less than expected corn supplies on hand. So once again, the taking inventory served its purpose, brought our estimates back on track, and gave us a lower ending stocks estimate for the old crop season. There were some small tweaks to the old crop changes, but the ones I'll note, the feed and residual demand was increased by 39 million bushels. It's now 5.81 billion bushels, so strong season for feed demand. Ethanol demand was increased by 6 million bushels. It's now 5.47 billion bushels. And exports were increased slightly, just 2 million bushels, but tweaked a little higher. So that new old crop estimate now, 1.76 billion bushels. And of course, that reduces the beginning supplies or beginning stocks in the new season also by 52 million bushels. So a friendly change there. It was expected because of what the quarterly stocks report said on September 30th, but this did come through largely as expected, but the ending stocks estimate of 1.99 billion bushels was actually a little above the anticipated number at 1.94. But overall, I would call this fairly neutral and expected. Not a big change, certainly not a big surprise to the market. Let's take a look at what USDA said for the state breakdowns of yields. And that was a little bit interesting. We did have some changes on the map from last month. As you can see, of course, Illinois is the king of the corn yield this year, 222 bushels an acre. That was the same as last month's estimate. Iowa's in second place at 214 bushels an acre. That's up 2 bushels from last month's estimate. Some of the notable changes that happened in the past month, Indiana fell 8 bushels an acre. They were 210. Now USDA is saying Indiana's at 202. And similarly, Ohio came down 4 million bushels to 183. But overall, not big changes. I guess the other one to mention, in Missouri, we had a 4 bushel an acre increase in yield estimate. That's now up to 185. This has to be one of the best weather years Missouri, I think, has had in a long time after quite a dry stretch there. So overall, as I mentioned, the new national yield estimate, 183.8 bushels an acre. Now looking at the world table of corn numbers from USDA, and you can see in the upper right-hand corner that the USDA's ending stocks estimate of world corn stocks was reduced slightly from 308 million metric tons down to 306.5 million metric tons. That was, excuse me one second here. That was just slightly less than expected, but once again, very close to expectations. So overall, we'd call that a neutral response on this report. Couple of things worth noting. If you notice in the bottom of the production column, we saw a slight decrease in the production estimate for Russia by 500,000 metric tons, and a 1 million metric ton decrease in the corn estimate for Ukraine. Now, both of those areas suffered dry weather this year, so that's not a big surprise. China, who we like to keep our eye on, at least as far as the latest estimates go, showed the same numbers USDA's shown for several months now. The production estimate, 292 million metric tons, and the demand estimate, 313. So no big change there. The historical perspective of world ending corn stocks, and we exclude China because they're not a major export supplier, but USDA is estimating 3.83 billion bushels of global ending corn stocks in this report. That's very close to where they've been most of the summer. And as you can see on this chart, the world ending stocks estimate is very close to where it's also been the last 3 years as well. So it's been very stable, just under 4 billion bushels for 4 years now. Corn export sales. Well, we're into a new season now as of September 1st. And the good news is that the success we had in corn export sales in the prior season is still carrying through right now. So we're still seeing very active corn export activity. And in fact, we had another sale this morning, 22.8 million bushels of corn sold to unknown. So that was a decent amount for a daily flash sale. Overall, the new crop corn sales on our latest weekly data are up 15% from a year ago. As I mentioned, USDA increased the export estimate in today's report by 25 million bushels. So far, they're looking for a 1% increase on the year. The good news for corn is that Argentina is planting less corn this year. Some are estimating about 10 or 12% less. You know, they had a leafhopper problem last year, and they're still concerned about that this year. And then on the Brazil side, you know, we're seeing a late start to the planting season for soybeans, and that means that the corn crop, the safrinha corn crop, will likely be planted at a late period early in 2025. Now, we still have plenty of time to go until then, but right now, the way things look out, U.S. corn should be positioned to do very well again with the export sales in the year ahead. Ethanol demand, you know, it's what can you say? When corn is cheap, the margins at the ethanol plant look very good, and they still look good. The blue line, the corn processing value from Iowa here as our example, comes from a weekly USDA report. And as of last Friday, they said $5.90 a bushel is the gross total of what you can earn from taking a bushel of corn to the ethanol plant and turning it into ethanol and distiller grain and corn oil. So when you got $5.90 as a finished product, and you're still able to buy corn on average for less than $4 a bushel, you got a pretty good situation there. This chart showing about $1.98 a bushel. So that's not quite as wide as the margin was this summer. It started to narrow a little bit. Of course, we've had a corn rally here the last month that's narrowed the margin, but overall, the processing value is staying stable, which is good news, I believe. The corn basis, considering the fact that we're expecting a big corn harvest this year, and obviously we're in a surplus situation that we haven't been in for a few years, the corn basis is holding relatively firm. Our DTN National Corn Index is 32 cents below the December futures. And on this chart, that's represented by the red line. As you can see, the basis got to its weakest point in late August and has been fairly steady to a little firm since that time. Seasonally speaking, both basis and futures prices tend to find their lows in early October and tend to trade higher, or at least firm, until the end of the year. So We still, for that reason, have a bias to expecting higher prices ahead, at least the next 2.5 months. This is the December corn chart, just bringing us up to date. This is as of last night's close. And last I looked before we jumped on here, corn was down about 2 to 3 cents a bushel. So we're still below the 100-day average, and we seem to be finding resistance at the 100-day average, which is the blue line on the chart. But we have had a nice, decent rally off the lows of August. And as you can see on the lower part of the chart, funds that have been heavily net short throughout the summer are finally starting to exit those net short positions as we get to that time of the year when lows are typically made. But in this case, it looks like the seasonal low came early this year, bottoming in early August. As I mentioned, the late planting start in Brazil, I think bodes well for corn prices ahead and the strong demand situation that we're in. But it'll be interesting to see if we can get through the resistance at that 100-day average level. And that's something we'd be looking for in the next 2.5 months. Let's take a look now at what USDA said for soybeans on the day. Again, this is the U.S. balance sheet. The lower right corner shows that USDA kept the ending stocks estimate unchanged in this report, 550 million bushels. There was just one slight tweak to production. The crop estimate now is 4.582 billion bushels. That is still a record high by a significant margin. And if you notice the upper arrow on the yield, 53.1 bushels an acre now, instead of last month's estimate of 53.2. So just a very tiny change in that production estimate is all we're seeing here. We did see some changes to the old crop numbers in the left column that you see, but I'll just tell you the bottom line is the ending stocks estimate for old crop soybeans only increased 2 million bushels. So even though there were actually five small changes to the numbers, they all kind of washed out and offset each other for the most part. The new ending stocks estimate now 342 million bushels. The most significant of the changes, they lowered the crush estimate for the old crop season by 8 million bushels, but at the same time, they increased the residual account by 9 million bushels. So I'm not sure, that's basically a wash in my mind. And they increased the export estimate by 5 million bushels and had a slight reduction in the old crop production estimate of 3 million bushels, which is a bit curious coming this late in the season. But again, these are typically numbers that they've shuffled through from the grain stocks report on September 30. So overall, we still have the same ending stocks estimate at the end of the day, 550 million bushels. That works out to about a 12.5% supply in terms of annual use. The yield estimates for soybeans, most of the changes also were small. Once again, Illinois is going to come in as the king of the soybean yield this year, 67 bushels an acre. That's up from 63 a year ago. Iowa coming in second place, 64. Those two states having very good years, obviously, in terms of weather, in spite of the many storms we had earlier in the season. The Iowa yield estimate, though, excuse me, let's see. Okay, I've got it on the wrong, whoops, sorry. Didn't mean to confuse myself there. I had my finger on the wrong line. The Iowa yield estimate of 64 bushels an acre is just up 1 bushel an acre from last month. Once again, as we saw with the corn yield, the number for Indiana was reduced. It was 63 bushels an acre last month. This report, they're showing 60 bushels an acre, and the Ohio estimate also comes down 3 bushels an acre to 52. Overall, though, these are just very small changes that we're seeing, and at the end of the day, the national estimate, 53.1 bushels an acre, just did not change much from last month's estimate. And it seems like that's one thing Rhett looked into this week, were changes from the September report to the October report. And we typically, the last 10 years, have not seen much change in the yield estimates. So that seemed true again here today. On the world estimates for soybeans, we see just a tiny slight increase in USDA's estimate of world soybean stocks. And it's almost not big enough to mention, but the new estimate is 134.65 million metric tons. If you look in the second column where the production estimates are, there were no changes to Argentina, Brazil, or Paraguay crop estimates. The one change, and I should mention, as far as China goes, their import estimate for soybeans did not change. That also stayed at 109 million metric tons. So just not much change there at all. And of course, it's still very early in the South American situation. Even though they were off to a hot and dry start, now they're starting to get rain coming through in Argentina. They're just starting to get rain in central Brazil. So it looks like that rainy season finally will get started, and they still have plenty of time to get their soybean crop planted in a decent time. So I think it's probably wise here for USDA not to make much changes this early in the season. Our export sales of soybeans, wasn't that long ago, the new crop sales were down roughly 50% from a year ago, but they've made that gap up fairly quickly lately. Now the new crop soybean sales are up 4% from a year ago in the new season. USDA is estimating a 9% increase in the new 24-25 season. That remains to be seen, and a lot of it's going to depend on just how successful Brazil is with their new crop in early 2025. Everybody's expecting a record crop out of Brazil this year if they get the weather to cooperate for them. USDA still estimating Brazil's crop at 6.2 billion bushels, which is just an enormous crop, and it will be a lot to compete with if that comes through in early 2025. So that continues to be a bit of a bearish concern for our new crop soybean prices moving forward. But as for the moment, we are the cheapest soybean supplier among the major exporters in the world, and we're seeing very active soybean sales early. So that's the good news. And we should be able to continue that hopefully until at least December before we start getting a better handle on just how big Brazil's crop is going to be this year. The soybean crush just continues to be phenomenally strong. As you can see on this chart, the blue line is the processing value in Illinois that USDA publishes weekly. The amount of meal and bean oil that you can get from 1 bushel of soybean these days is worth $14.21 as of last Friday. The soybean itself on a national average basis costs less than $10. So that's an incredible $4.48 premium on every bushel of soybeans processed. And what's phenomenal to me is, we've had a lot of bearish pressure on the soybean price, expecting a record harvest this fall. So that it's been under a lot of pressure this summer. But if you look at the processing value of the soybean, it did take a hit in early August, but since mid-August, it's been very firm again. And this is just an incredibly wide margin. So there's a lot of incentive to keep crushing soybeans here at home. That's the good news for the demand side of the market. The soybean basis itself, it's been a tough summer for basis. So ever since about roughly mid-July, We've seen a significant weakening in the soybean basis, and that, of course, that has gone along with the good summer weather we've had. We had very mild temperatures to start out the month of August through the filling period for soybeans. There was just nothing bullish that you could say about soybean prices at that time. And the anticipation of a record harvest this fall has really sent the soybean basis lower. But as you can see, it's fairly well in line with where the basis normally is this time of year for the past 10 years. It's the sixth weakest basis for this time of year on record at the moment, which lines up fairly well because it also happens to be the highest ending stocks total we're expecting in 6 years. So it tends to match. And again, similar to corn, the history of the soybean basis is that it typically makes its lows in early October and starts firming the next 3 months ahead. So between now and the end of December, we anticipate a firming in the soybean basis, and that should be good news. And of course, it also helps that this is the best time of year to make export sales before Brazil's big crop shows up in February of 2025. So we should have some opportunity here for a little better soybean price. We'll talk more about that in a minute. Well, here it is. So here's the November soybean price as of last night. Last I looked, we were down 8 or 9 cents. Let me take a look and give us an up-to-date quote here. No beans down 7 1/4 now. So it's taken the report fairly well. But as you can see, even a little weaker than corn, it's been reluctant to challenge the 100-day average. And then we just broke below the 20-day average recently. So we have had a nice improvement off of the August lows, but getting above 1050 or 1075 could prove to be a little tougher situation here. I think the other thing that's going on in the soybean market right now, it really wasn't all about the USDA report today, but as I mentioned, central Brazil is finally getting rain in the forecast, and Argentina has been getting rain the past several days as well. So they're finally getting a better chance for a better start for their new seasons down south. And we've seen that pressure the prices recently. But once again, that 100-day average continues to be kind of an important level of resistance for the moment. So that will be the challenge the next few months to see if the seasonals win out or if there's just too much selling pressure up at these mid $10 to almost $11 prices. Let's take a look at wheat now in today's report. Now, I should mention, because we had the small grain summary on September 30th, and USDA came up with a production estimate of 1.97 billion bushels at that time, that everybody assumed that was the number that was going to be plugged in to today's wheat production estimate, and that's exactly what happened, as you can see in the far right column. We did get some other small changes, though, which helped USDA reduce the ending stocks estimate for wheat from 828 million bushels. Now it's 812 million bushels in today's report, and that's a drop of 16 million bushels. Among the changes that I saw, there was a tweak to last season's production estimate. USDA reduced last season's production estimate by 8 million bushels. And there's probably an explanation in the text, but I'm sorry to say I didn't have time before the webinar here to go through the explanations in the text. But anyway, they did some work and decided that there was a little bit less production last year. Then there were some small tweaks made to other demand estimates, but the bottom line was the ending stocks estimate for the 23-24 season was reduced by 6 million bushels to 696 million bushels. So just a slight reduction in that ending stocks number. And then in today's new crop estimates, We saw some changes in the planted and harvested acre estimate. Most notably, the harvested acres were increased 600,000 acres to 38.5 million. But at the same time, the yield estimate was dropped for this year season from 52.2 down to 51.2 bushels an acre. So that helped square up with the production estimate, 1.97 billion bushels we already talked about. The only demand change of note in the new crop estimate was for the feed and residual account, and that was increased from 110 to 120 million bushels. So once again, the new ending stocks estimate for wheat, 812 million bushels. It's not a big change, but a little bit lower. And it puts us at about a 41% stocks to use ratio, which is still a very comfortable amount for wheat. On the U.S. balance sheet for wheat, again, no big changes really to speak about. In the upper right corner, you can see the ending stocks estimate was just increased slightly. Instead of 257.2, the ending stocks estimate for the world is now 257.7 million metric tons. Very small amount. The ending stocks estimate excluding China actually went up by roughly the same amount, roughly 500,000 metric tons. On the production side, there was just some small changes to note. You'll see on the lower rectangle I have highlighted there. The production estimate for the European Union was reduced again. We've seen a lot of reductions there this year from their wet weather conditions. This time they lost 1 million metric tons of production and are now down to 123. Similar for Russia, lost 1 million metric tons. Now they're down to 82. But in Ukraine, they actually boosted it 0.6 million metric tons. So a slight increase for Ukraine. But again, these are very small changes, really not anything to shock the market or the pricing situations at all here. Historically, world wheat supplies, excluding China, are still the lowest in 17 years. This report says 4.53 billion bushels. That's very close to where we've been in the last several reports. So not much change there. And as we've said before, the lowest in 17 years sounds like it should be a bullish number for world wheat ending stocks. But as you can see on here, there's not a lot of difference between this ending stocks total and what we've seen in the past 17 years. So it's really been a fairly consistent surplus level that we've had across the globe in spite of all the volatility and war and all the situations we've had there. The Kansas City wheat basis for the hard red winter wheat contract has been kind of interesting this year. It's still among the weaker that we've seen for this time of year compared to the past 10 years. But that red line, which is our current basis, works out to 60 cents below the December contract. And even though it's the 7th weakest in 10 years, we can see that it's been firming fairly well since the month of June. And it's actually a little bit better than it was a year ago, which is the blue line. So it's not the worst situation, but we've definitely seen better export sales activity this year. And I think that's helped us hold the firmer basis that we've seen recently. As far as the recent trading in the wheats, we've seen a pretty interesting challenge of the 100-day average here. It poked through it 1 or 2 times. Today, last I looked, we were down 7 to 9 cents a bushel, but I don't really think that was related to the report here. We've had a nice rally in the winter wheat prices, and Minneapolis has gone along as well since late August. And a lot of it's due to concerns about dry conditions here in the U.S. and especially the southwestern plains, where they are in need of more rain once again. and also in the Eastern Black Sea region. So Western Ukraine has gotten rain recently that should help them for a while, but Eastern Ukraine and Russia have been very dry. And our meteorologist, John Brannick, tells me that there is rain in the forecast for that area, possibly late next week. But in terms of the big picture, it's probably not going to change a lot, and they're probably going to be fairly dry through the winter period. So it'll be very interesting to see how that Black Sea region looks when we get to spring and that winter wheat starts coming back. In conclusion, I just didn't see any big enough changes today to really alter, I think, probably the market's view, at least from a fundamental perspective. I'm calling it neutral for all three: corn, soybeans, and wheat. Of course, the U.S. ending stocks were lower today, but it was actually a little more than expected. We could say slightly bearish, but these are not big amounts. Soybeans also neutral. They kept the ending stocks unchanged. That was also a little more than analysts expected in pre-report surveys. And for wheat, it seemed fairly neutral. So we did get a little bit lower than expected U.S. ending stocks, slightly higher on the world ending stocks. We can call it a wash, but we still have roughly the same fundamentally looking type markets today that we did a week ago and for the last several months, really. So no big changes. The next WASDE report will come out on November 8th. As Greg mentioned, I want to welcome Rhett Montgomery to the team. He's our new lead analyst as I retire. I'm very excited for Rhett. He's got great education, great credentials, great work experience as a great grain merchandiser, and just a good life background as growing up in Cozad, Nebraska, with a farming background himself. So you'll get to meet Rhett more in days ahead. I'm looking very forward to him helping him get established. You wouldn't believe all the tiny little details you have to learn to take over an analyst job like this. But so far he's doing fantastic, and I think you're going to appreciate his work in the days ahead. So with that, Greg, if you have any questions, this is the good time.
Great, Todd. Thank you, and yes, welcome again to Rhett. Just a couple. One, on the soybean situation with South America being delayed. I mean, they're getting some rain now and beginning to get some of those beans in the ground. They've been keeping their powder dry there. Do you expect that has pushed things back enough that our day in the sun as being the marketer of choice on soybeans might stay around a little bit longer into late winter, early spring, or is it too early to tell on that?
Well, best we can tell, it looks like their planting season will get underway about 2 weeks later than normal. So yeah, it could buy us another 2 weeks of export window there, absolutely. And of course, whether they get a consistent or normal looking rainy season like they usually do, or if they come up shy on the rain amounts or so forth, is going to matter a lot between now and January. And so we'll be watching that real close. But yes, this late start does help our export opportunity a little bit.
A related question to that, someone asks, what's our take on how many soybean stocks are left in South America? What's left of last year's harvest?
Yeah, I don't know how to predict that, but the way I get the best read on that is to look at the price differences between the FOB price in the U.S. and Brazil. And it was about roughly a month and a half or almost 2 months ago when the U.S. started offering cheaper FOB soybean prices than Brazil had. And then we saw both of those prices actually turn higher, but the gap between the U.S. and Brazil has widened. So now, last I looked, we're roughly, I think, about 75 or 80 cents a bushel cheaper than Brazil's FOB soybean prices. But the fact that the Brazilian price turned up so sharply just tells me that I think it's clear that their soybean supplies are running down, and of course, at a time when we're expecting a record harvest here this fall. So it's it's always hard to guess the amount of supplies in another country, and one reason USDA has a difficult time with that is you can see witness because of all the times they've had to go back and revise their crop estimates and export estimates for Brazil and Argentina both. So that's always a bit of a guessing game.
Great. The last one I'd ask is on the wheat side. We don't talk a lot about wheat here lately, but with kind of where prices are now, a little bit stronger situation than we've seen normally, and what you talked about in both Eastern Ukraine and Western Russia, and we're also beginning to see some dry areas in Australia. Could wheat be and from a price adjusting standpoint through the winter, could wheat be the crop to kind of keep an eye on?
Yes, and just for the reasons you all described, Greg, just because it does have that weather potential. And, as an analyst that's been around for a while, sometimes it makes me cringe because we all know that weather conditions can change quickly and sometimes in ways we don't expect. So it's very hard to bank on just what things will look like for the crops when we get to the springtime and those winter wheat crops start to emerge again. But right now, yeah, you have to say there's some legitimate potential there for a much more bullish situation.
Great. Thank you. Thank you very much. And thanks again, Todd, for walking us through these numbers. I want to thank everyone for joining our webinar today. As a reminder, this was recorded, and the rebroadcast link will be up on the dtn.com website within 2 business days. So if you want to revisit this, or you want to share or talk to it with some of your colleagues or workmates, it will be up there to be able to do that. If you have additional questions for us, feel free to send those to Todd's email address. We'll be capturing those as they come in and work them through either Todd or Rhett, depending upon when they come in. As Todd said, our next WASDE webinar is November the 8th. That is another Friday report, so late week. Look for some interesting things to happen and drop on a Friday. I hope you'll join us then, same time as this one, and you can again find information on that webinar and sign up for it at dtn.com in the same area that you found this one. The only thing I'd add is, as far as weather and some of those issues that we talked about, you can follow what's going on in South America and the rest of the world on either our Ag Weather Forum blog that's on our electronic products, or in our South America Calling blog. We've been putting a lot of weather information in there, and as far as how that crop is getting in the ground and moving along. So it's a good place to catch up on that kind of stuff. With that, we'll conclude today's event. I hope everyone has a great and safe harvest as we continue to work through this 2024 season, and have a great weekend.
Thanks all.